This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil, and today I'm going to give you a stock market update as of Thursday's close for Friday morning. We finally got some things to talk about here. A little bit of action taking place after a very quiet couple weeks. I do want to mention that I did a show for Stock Charts TV today that's now on YouTube. I would look for, it's Stock Talk by Joe Rabil. I would look for that. I think if you're watching, if you've read my book, gone through my course, and or are taking or a subscriber to my research, I think the lesson today might help simplify some things in terms of the thought process you want to have when you're looking at multiple time frames and moving averages. I didn't go into any of the momentum characteristics, but I think it might, for some people, it might add some value. So I think it's worth going through. Now, I want to go into the conditions of the market and just focus in on the bottom here. The sentiment didn't change very much. In fact, the number of bulls stayed exactly the same. We've got 45% bulls. We usually start to feel a little queasy if the bulls get up towards like 55, up in the mid to low 50s, and then we start to think people are getting a little too bullish. So at least based on this Investors Intelligence number, which is the one I use. Right now, the difference between the two is at 21. Normally, you're looking for it to get, closer to 30, maybe even into the 30s before it throws off a warning signal. So we've got some room here. We are overbought. If you look at the overbought, oversold oscillator, we have worked our way up to 71%. It's a 5-period RSI. It is a pretty fast-moving line, but if you think about it, we really haven't been overbought that much. It's at least not on a Thursday. This last one, it was on a Friday. By the end of the week, it did flip. It did hit that level and then rolled back down. But we really haven't seen any extreme readings in quite some time. So we're working our way up into the overbought arena. But the thing is that we're not all that bullish. So this could have some room to go. Now, I do want to talk about the volatility again because I think it's so important. The red line is the average true range of the S&P bars. So that's the individual bars. We're looking at the average true range for them. We had this incredibly tight period for about 7 straight days. That's not going to cause this line to go up, right? It's going down. Now it's getting a little bit of a pop because the last couple of days are so much bigger than what we've had. But it's still below a declining moving average, so that is considered a positive. All right, I've got that in the positive camp. If we go to the weekly, that's even more bullish. Look at how this line hasn't done anything but decline. It just keeps dropping. If we're getting ready for some kind of a big reversal in the market, we should see this line going up, not going down. All right. If the market's getting ready to make a big drop, we should start to see the volatility, the size of the bars going up, and it's just not happening yet. It could happen, instantly. We could have a false breakout. It could reverse, but just based on the way I'm looking at this, I don't think. I think we might end up getting a little bit more follow through. I'm going to go into the trend and momentum now. We can just look at this, though. We currently have a daily trend that's positive, a weekly trend that's positive. The monthly is in neutral, or what I would call transition if you watch the video that I did for Stock Charts TV. So that's neutral, but it's really a transitional phase, and we have to see how that plays out. Now, the interesting thing that took place this week is the change in the momentum on the daily chart. Now, as you know, again, anyone who's been watching any of my videos or gone through the course knows that momentum usually starts on the smaller time frame, and then if it's strong enough, it spills over into the next time frame and then the next time frame if it keeps going. So this is a pretty good sign to see this starting to work higher. All right, let's go ahead and go through this S&P chart. So we've got the monthly bars up until last month, had been contained inside the 18 and the 40-month moving average for almost a year. And then last month we closed above. We had a tiny little month just below the breakout. Now we're actually getting through the, well, it's close. It's not really an official level. The S&P closed at 4198, 4200 is the breakout level. Let's just look at this 418. Yeah, we are above that prior high. I would consider it a breakout. I think 4200 is a little bit of a psychological number. It would be good to get through. But the fact that we're having a close above the 18 and we're taking that out to the upside, I think is a positive, even though this line is declining. The fact that this line is declining means that this isn't the start of a long-term trend yet. It might be the beginning of something, but if it's going to do that, maybe it moves up and then it pulls back. Or maybe it pulls back right away, and then this line needs to cup around and start rising, and we need to get both of these lines moving up again. If we can get that in position like that, then we have the monthly trend up, and we already have the weekly and the daily up. So we've got 18 above the 40. Both lines are moving up. And more importantly is the confirmation that took place on the weekly. We had a 1, which is the break of the downtrend line. And then we had the 2, which was a test of support, which is also the 50% retracement of this move. And then we came up and we were hesitating right underneath the breakout level, and now we're taking off. Now, here's the really good, the positive about the way this is played out. There's 2 things that I would say that are pretty positive. Number 1, we are not overbought. We're breaking out and we're not overbought, right? I mean, if you make a move like from here and you break out, you're up 1, 2, 3, 4, 5, 6 weeks in a row, and then you break out, that's not really conducive to follow through, right? But what this did was it went right underneath the breakout level and moved sideways in a pretty quiet fashion. And the second thing that I really like about this is the compression from last week. This got so tight last week. I don't ever remember being right underneath a breakout like this and just not moving, being that quiet. So obviously follow through will be important. I mean, there's no doubt about that. We're right at the 4,200 level in the S&P, and we're just barely above this prior peak. So we still have one more day left in the week. We'll have to see how Friday goes. If Friday is strong and we get more follow through, I think that would be a really good sign. I don't really want this, as I mentioned in my show earlier on Stock Charts TV. I got to tell you, I mean, I don't think this should be a stealth breakout. This should be a big, strong bar, and we want to see this volume picking up. It should be now we've got more time left. We've got one more day in the week. So if we get a good day tomorrow, the volume could be pretty decent. Overall, though, I think it's important that we are confirming the trend and confirming what we're seeing on the moving averages. Now, the MACD is moving higher. What's missing right now on the weekly chart on a momentum basis, and the reason why I still have it neutral, is this green DI is way down here. We don't really have great volume confirmation yet. Let's see how the week finishes, and let's see if tomorrow can bring a higher high here. I mean, we really want to see this getting back above the 25 level to get confirmation on this time frame. But as I've said, we're going to get a confirmation in the momentum on the daily chart first. Well, really on the hourly, right? And then it spills over to the daily. And we can see, look at what the hourly is already doing. You see this ADX moving, crossing above 25 on this breakout. I'll get to that in a second. But let's go through the daily. So this was moving up, and then look at how quiet this got. Now, it could go either way when it gets quiet, but usually I'm thinking bullishly when it gets really quiet, because that goes to this lower risk when the ATR is dropping. When we have really quiet action, that's really not conducive to what you would think is distribution. I mean, usually before a drop, we get a distribution phase, right? You get signs of distribution taking place. We really haven't had that in the volume. You haven't had it in the MACD. Look at what the MACD has done. The MACD has actually been working its way down towards the zero line, and I kind of call this like a flyby, because it doesn't actually touch the zero line, right? It's not even getting there. It's just sort of flying by, and then it's already turning up. We already are crossing back above today. And look at what green DI did. Green DI is making a higher high. Look at the volume picking up, right? All of these things are major positives crossing back above these key levels here. So we have to respect. This is what I've been saying for a while. I know I've been saying that there's a 1, 2, 3 in both directions. But one thing I have been saying for a while is that we'd have to respect a breakout. And the part of the reason is that I think there's a lot of people on the sidelines waiting, and they've been waiting to see which direction this thing wants to go. So I would not be surprised if you get a little FOMO buying. People don't want to miss out. And I'm talking about institutions that maybe have been on the sidelines, maybe some hedge funds that have been short, thinking this was a double top, and it's going to roll back down. So we have to see. If we don't get, I mean, obviously, we have one more day left in the week. We need some follow through here, but I think if we do, based on what I'm seeing with this MACD and low ADX condition and the green DI kind of kicking in gear, would not be surprised if we start working our way up and start hitting these next couple targets. 4,400, I think, on the S&P seems pretty realistic on this breakout. It's possible it could go a little bit higher, but I think we could at least get back up into this kind of congestion area up here. So that's kind of where I am. Now, if we look at this hourly, this is one thing I did want to mention. So look at how quiet this pattern is. All right. Now, if we look at what happened the last time this tried to break out here, you see how this was way overdone on the downside, and we got kind of a violent, almost a climax looking ADX signal with a stretched away, and then we just took off. And look at how overbought this was trying to break out. And as I've said a number of times, when you break out from an overbought condition, it's not conducive to follow through. So we try to break out from an overbought condition. Now, sometimes what happens is you just pull back and wallow around a little bit, and then you turn back up. But in this case, it just failed miserably, turned down, made a double bottom. Now look at what happens. We get this spike low, big reversal up. So kind of a gap down, gap up, right? Island reversal here. This is like a little island. And we gapped down to it and back above it. And then look at what happens. So this is a spike and ledge. See the spike and ledge? And what I love about this ledge is that it was it was so quiet. I mean, we had a 50-point range in the S&P. S&P index. It's pretty rare to have such a small little range for a long period of time. Look at what the MACD did, holding the zero line. We got a little double bottom right at the zero line. Look at this low ADX pattern that developed here. And then as we start moving up and crossing over, we get really pretty good confirmation with a higher pivot low after the breakout and a green DI holding here, better volume action. So a lot of good things going on this hourly chart. Now, can it keep spilling over into the higher time frames? Well, it's already spilled over into the daily. The weekly is still yet to be determined, because I know the momentum in this is we're getting pretty good confirmation that things are starting to turn up on the daily chart. It's still a little early for me until we see this. Now, if this ends up kicking into gear and really breaking out, then we could be working our way back up towards the 45 or 4600 area in the S&P. So we just have to watch. Right now, I think the bias is up. And what I've been saying to my subscribers is have your list ready. Go look for the stocks that are showing good action as this is taking place. And then again, we want to see what kind of follow through we get tomorrow. But overall, this is a pretty attractive overall pattern. The one thing that we have to guard against is when we break out, you got to watch for quick failure. All right. If there's no quick failure here, if we get a decent follow through day tomorrow, especially with what I'm seeing in the price and the DI action and the MACD, then I think we got to think that we've finally broken out of this range. All right. That's the update for the week. Let me know if you have any questions. Thanks.